Smaulgld.
Hello and welcome to another Smaulgld live stream. It is Thursday evening, the 7th of February 2019. Tonight's topic is nickel money. A follow-on from last night's show is copper money, and this one is going to tie into the two other episodes we did regarding the golden cross and the silver cross and the demonetization of silver. Nickel plays into that, and we're going to take a look at the monetary history of nickel, some of the characteristics of nickels, and then we're going to do an analysis to see whether nickel meets the test as a monetary metal. All right. Let's also check today. We are going to look at the gold and silver markets, the crypto market, some crypto news. We're going to do Moronica. We've got some new photos from Smaulgld mug stackers. Some nice looking photos. We have a first in the photos as well, so we'll be getting into that, and then eventually we will hit our nickel topic. Let's take a look at the gold and silver markets, general markets, and some gold news. Gold price today did manage to go higher. The stock market was down 220 points. The Dow Jones was down 0.87%. Down 200 points, still above 25,000 at 25,169. NASDAQ took a bigger beating, down 1.18%, or down 86 points, down to 7288. And the S&P 500 almost shed 1%, down to 2706. Now, generally, in the most recent couple of months, when the stock market falls a lot, gold on that particular day does manage to eke out a gain. It's usually if the declines are 2 days in a row that we see gold move more on the second day. So we'll have to see how the markets do tomorrow. Let's take a look at the futures for tomorrow and see what's going on. They say the markets went down because there's no sign of a deal yet, and that Trump is not going to meet President Xi before the U.S.-Chinese deadline, which I believe is March 1st, which might mean that we might have those tariffs come into effect on both sides, and the general consensus is that would be bad for global economic growth. All right, now let us see what happened in gold. Gold went up $3 up to $13.10, and where does that put us right now? We're still at $13.10, so no change in the after hours markets at all, but gold did go up 0.25%. And let's take a look at silver. Silver also up a bit, up 6 cents to 15.72, up 0.38%. So both of them went up about the same. Not a big day for either of them, but the stock markets were down pretty significantly. So at least the gold and silver markets did move up a bit. The gold-silver ratio down a little bit, down to 83.35. Pretty much flat, but still well above that 80-to-1 mark. In other gold news, Nicolas Maduro, he's got no gold left almost. Apparently they sold 40% of their gold last year amid a cash crunch, and I think whatever gold they have left may be in London, and they're holding on to it. So I don't think that Venezuela is going to be able to buy much more time, given that they don't have much more gold left. Also, this isn't really news, but it's a point I've been making. I've been reporting on Russian gold reserves for about 5 or 6 years, and every now and then Zero Hedge zeroes in on it and reproduces my monthly report with the charts, and a lot of people get really excited. Russia is stacking gold. They know what is coming. They are de-dollarizing. Maybe, but the main reason I've always said that Russia is stacking gold is they have the third largest gold mining production in the world, and they have one of the worst world currencies. So it makes every bit of sense to buy the gold from your backyard. Kazakhstan is similarly situated. They've got a decent amount of gold production. They have a horrific currency, loses value every year. You might as well buy gold and add it to your reserves. Diversifies from the dollar. It makes total sense. And what does the observation from the Wall Street Journal finally come around to? What's better protection from sanction, Russia figures, than having your own dedicated gold mine in Siberia? Like I always said, Russia has a gold mine in their backyard. When people say, I am like Russia, I am buying gold because they are smart. And I always say, you don't have a gold mine in your backyard where you might be able to get gold at sub-market rates, or at least at market rates, and convert them for a depreciating currency. So good to see the Wall Street Journal catching on that is what Russia is doing. They are converting their rubles into gold. Over on the cryptocurrency side, let's see where we are. Pretty much been limited volatility. Bitcoin right now, essentially flat over the last 24 hours. They are at 33.58. And Bitcoin Cash at 114. Some flat as well. Ethereum flat at 103. Litecoin up 1% to 32.81. Now there is a Coinstar. I went to a grocery store today and I saw it. So I apologize. It's on the side there. It's not showing that way on mine. But there you see is they have rolled this out now. It was initially in 3 states. It's now in a couple of dozen states, the Coinstar. Oh, that's upside down too. But as you can see there, they have introduced the being able to purchase Bitcoin. You can see to the black box is where you can buy Bitcoin. And I went through the screens until they ask you to add your telephone number. It's not an anonymous transaction. You enter your telephone, then you get a coupon, you bring it home, you go online or from your cell phone, and you redeem your coupon for the Bitcoin. Doesn't take coins. It's interesting. You can't dump in a bunch of coins into Coinstar and get Bitcoin. You have to put cash into the machine. So they must have, that I didn't even see. Maybe it's in the front there. I didn't see because generally there's not a place to put cash into a Coinstar. They must have had to yeah, there it is. You can see up there to the far right, the black thing. They had to rejig the machines in order to get them to accept Bitcoin so you can put the cash into the machine. The reason I mention this is all of these Coinstars, these 20,000 locations, they don't all accept Bitcoin yet. But they are incremental to the 4,300 plus Bitcoin ATMs, because in a sense this is an on-site ATM where you can buy Bitcoin at a point of sale in a place like a grocery store or some other type of convenience store. And probably I didn't take it looks like this might effectively automatically double the amount of places now you can buy Bitcoins from 4,300. I would guess that if there's 20,000 of these around the country, and the list I saw on the map I saw looks filled at least 1,000 or 2, maybe 3,000 or 4,000. I'm gonna have to go back and see if I can get a better handle on that, but it does show that there's now at least 5,000 places in the country excuse me, in the world where you can go around and you can buy Bitcoin. And is there anything else on the crypto? There's a few other stories in the cryptocurrencies here. Venezuela back in the news. Bitcoin trading reaches all-time high in Venezuela amid ongoing economic collapse. That makes total sense. Price of gold, silver, everything is anything that's not nailed down has skyrocketed in Venezuela, but they are using Bitcoin. Trading volumes reach new all-time high, rising to almost 7 million a week on a P2P platform that's local Bitcoins. Now, the way local Bitcoins works is it's almost like a bulletin board. You go there and you can trade, and you can also agree to meet up to trade your Bitcoin in exchange manually, phone to phone. 7 million a week doesn't sound like much, but there's not that much money in Venezuela. So if that amount of Bitcoin is being traded in Venezuela, it's significant for Venezuela because there's not much of anything being traded in Venezuela. And just to show you that these people, the people that make Bitcoin predictions are worse than the people who make the gold and silver predictions. While gold and silver people are generally just pumpers, and they're just telling you everything, it's always set to skyrocket. A lot of Bitcoiners are the same way, and they were always telling you it was set to skyrocket. All these outrageous, ridiculous targets, 50,000, 3 million, 100 million, whatever it is. But when the price started to drop, the same people that were predicting, or some of the same people that were predicting these 50,000, 100,000, 1 million numbers are now predicting numbers like 2,000, 1,000, but ultimately 2 million. I don't think they have any idea what they're talking about, but here's one. I file under worthless Bitcoin prediction. Bitcoin bull Tom Lee, it's this according to CN, predicted a 25,000 milestone in December. That never happened. And then his firm just set a target of 2271 this quarter. So they're expecting, I don't know why, unless they have inside information, why they would expect something to drop in the next 6 to 8 weeks any more than they would expect it to go up to 25,000 from 5,000 in 3 months. So there it is for what it's worth. Predictions are generally almost inevitably wrong. All right, let's take a quick look at some other things in the markets. By the way, Attorney General Barr went through the Senate approval committee, and they approved him along party lines 10-8. Mittens Romney says he's going to vote for him, so it looks like he'll probably get approved 51-2 or 3 to whatever the Democrats vote against. Maybe 1 or 2 Democrats will vote for him, but looks like he'll be approved next week in a vote. And that all leads into the Mueller investigation, the wrapping up of that. And we'll cover all that when and as that stuff happens. Now, China and Trump, we mentioned earlier that they're not going to meet on the 1st of, but before the 1st of March. So it looks like those tariffs will probably just kick in. And one of the things that we noticed that a lot of people were guffawing about was that the trade deficit increased even though Trump had slapped down a lot of these tariffs. And I had suspected back then, and it's proving to be correct, and it didn't take much genius or foresight, was that a lot of companies front ran the tariffs, and if they were involved in an industry where they knew the tariffs were coming, they imported more, they stocked up on inventory, non-inventory that wouldn't go stale. And also, I would imagine other companies anticipating that maybe their industry might be next also stocked up. But in, I think, the most recent month, that deficit has really narrowed. And this analysis says that the U.S. might be winning the U.S.-Chinese trade war. And the reason that's probably correct is it is one-sided. The Chinese send the United States more goods than the U.S. sends them. And China is appearing to have been being accommodative on accepting more U.S. Imports. And also China's had to make a lot of adjustments to their own internal economy because, remember, they're centrally planned. They were counting on all of that stuff. All of that money they were going to get from exports to the U.S. They can't count on it anymore. And so now they have to get back into where can they spend, print money, print yuan, game-changing yuan, to get some more GDP growth and keep the wheels going on the economy. They might have to lend more money, do more infrastructure, whatever it is they have to do. But one thing I know for sure is they'd like to get this back, the trade with the U.S. without the tariffs, and they also don't want to lose face. So they have somewhat of a conundrum, and we'll see what happens. And the Fed. Now this is an interesting point here. It's just being foresight, makes sense. Kaplan says fiscal stimulus is waning, rate hikes to bite. Now he's absolutely right. There's always a lag effect when you cut rates. The stimulus of the cutting of the rates doesn't take effect immediately. In fact, it was interesting. It wasn't until the third QE that the housing market actually started to go up. If you remember, after the housing crisis 2008 and 9, there really wasn't any movement in home sales or even home prices until 2013, and really not any home sales increases until like 2015. So there is a lag effect on any type of monetary stimulus. There's generally a quicker impact on fiscal stimulus, just for those who can get confused like John Kennedy did between monetary and fiscal stimulus. Monetary stimulus or monetary policy is what the Fed conducts through the movement of interest rates, or in extreme examples, printing money, doing things like QE, buying assets. And fiscal policy is what the Congress does. They're taxing, spending, those types of things. A tax break, if it takes effect immediately, is going to have a much more immediate effect than a lowering of interest rates. And so all Kaplan is saying is that the fiscal stimulus is now waning. People are getting used to. They got the one-time bump when the first tax cut came in. A lot of companies handed out money to employees, and now people have adjusted their incomes. This is the first tax year now where people are under the tax cuts, and that stimulus is, having will somewhat fade. And the rate hikes, however, that they've done over the last year, remember those 6 rate hikes or so over the last 2 years, will start to bite. And he's just mentioning that, and therefore his conclusion is we should hold off on the rate hikes because we haven't yet seen the impact of this round of rate hikes. And of course, this could be just a way of saying we're not going to do any more rate hikes. We're worried about the market. Yellen said the other day, or was it today? I'm not sure. That what did she say? She said, that the next move could be a rate hike or a rate cut. Well, it's not saying a lot, but all right. I think it's time for Moronica.
Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
All right, we've got one that is moronic and one that potentially is not moronic. Let's do the one that is moronic first. Facebook. New employee criteria at Facebook. Facebook is now going to evaluate their employees on how they help solve social media issues, and they're going to tie their bonus to that. Now, the reason this is troubling and moronic, what they're saying is your value as an employee is not your productive value, not how your presence at the company impacts the bottom line. Now, there are certain employees, and every company knows this, that are revenue producers. So the way you would judge an employee would be on the basis of how much revenue they bring in. And generally, those are salespeople. So you would calculate how much does a salesperson keep in all of his salary, his benefits, and so on. How much does he make? How much is the cost of the product that he's selling or she's selling? And then you figure out, wow, I make $150,000 from that person being here. That employee is on the plus side. If a salesperson after the training period costs you more money, well, then that salesperson will probably leave, or you'll probably ask them to leave. And that's simply just operating a company on the basis of how you value employees. Now, there are other employees who don't produce revenue, but yet are essential to keeping the company running. Customer support people, people who keep the website running. They may be, and salespeople on Wall Street always call these people sunk costs, and they view them as almost non-essential because they don't generate revenue, which is a foolish way of looking at it. However, you still have to include them in your cost structure, and you can measure their value as to how well they support, essentially, the revenue generating portion of the business, whether it's through sales, online sales, or how well the website runs, whatever it is. But here it looks like they're going to be giving employees bonuses and valuing them not based on their economic value to the company, but on these nebulous social justice constructs. Now, they may have enough money in the bank to do this, but it is not going to be something that's going to help. They may think it helps the culture of the company, which is an intangible, and there may be some goodwill in that, but I'm sure it's going to be very, very hard to track, and it's probably a mistake. I actually think it's moronic when a company does not have as its primary goal serving customers and trying to do that in a way that you can make the maximum profit. Once you start trying to serve society in general by your actions, then you may be at cross purposes. Now, one way a company, if it wants to be socially responsible, and the best way I think is to make the best product as possible at the best price, make the best profit, and then if it's not a waste of corporate assets and the board agrees and the shareholders are okay with it, to donate money to where you think you can make the best social impact. Even that you could say is a waste of corporate assets. Let the shareholders take the profits and let them go out and donate to charity if they so choose. But actually going down to the level of the employee and making sure that they're making some type of socially acceptable contribution, I don't think that's a good idea. I actually think it's moronic. And again, has nothing to do, this is all good intentions. The old expression, the road to hell is paved with good intentions. The purpose of a company, as far as I'm concerned, is to make money, period. As the gold and silver, or money people like to say about gold and silver. All right, now this one is also economic, and it may or may not be moronic. A consumption tax, I always look at every tax as being moronic to begin with, any new tax, because it's generally a function of a politician comes up with something and they've never met a tax they don't like, and they're always going to say this tax is great for this reason. Last night we saw that woman trying to explain why taxing ammunition, 50% tax on ammunition, was going to cut down on gun violence. It's totally moronic. This one on its face looks moronic. U.S. consumption tax of 5% could raise $3 trillion over a decade. And my initial reaction was, or perhaps the U.S. consumption tax could cut consumption and therefore production and sale of items of consumption, causing the loss of profits for companies and therefore loss of jobs for employees, resulting in a loss of more than $3 trillion in taxes over a decade. Now, I heard from Michael, he's a longtime listener of the Smaulgld program. He mentioned they actually did this in Canada, and they did. They were surprised at the revenue they generated. And this does come down to perhaps the Laffer curve. I suppose if you don't add any tax to consumption, you're not going to get any revenue. If you tax consumption at 100%, well, you're not going to get any revenue either, because no one's going to buy things for twice the price, or very little. You're going to actually lose. So maybe there is a sweet spot. Maybe there is something. I'm not advocating that you start taxing consumption, but maybe it's not as moronic as some of the other taxes, which are just effectively a way of just confiscating wealth. Now, I have more of a problem when they try to confiscate the assets. Dizzy Miss Lizzie's program, if you have a certain amount of assets, $50 million, she wants to take a portion of that. That's plain wrong, because you've already paid the tax on the income, and it may have been at a very high rate. And what was left over, you then put towards accumulating assets, whether it's a house or a car, a pile of gold or silver or whatever it is. And she wants to tax that artwork. And I guess it would be taxed every year. It's like you have to pay just to have it. And you already do that with a house. You pay property taxes. All right, enough on taxes today, I think. Now, let's take a look at some of our Smaulgld game changer mug stackers. Now, we've got two pictures here. We've got one, well, both of them are pictures of the Smaulgld mug brigade, but one of them has a cat in the picture. We've never had a cat photo. We've got pictures, plenty of dogs. But first, let's show David with his newly acquired Smaulgld mug. There it is. Very fine looking mug there. Looking happy, very content to have his mug. It's always good to see people enjoying their mugs. All right. Well, thank you, David, for your purchase and your support of the channel. And now we have a new Smaulgld subscriber. This is Linda with her YouTube channel, Morning Mayan, and here she is with her cat. And there's a very fine looking photo as well. Very curious looking cat there. I don't know if she's eyeing, or he or she is eyeing the mug. It's definitely an attentive cat. And there's Linda enjoying her Smaulgld mug on the floor of her, looks like right in front of the door there. Thank you very much again, Linda, for joining us in the Smaulgld mug brigade. All right. Let us now, we'll leave that picture up for a few minutes, and we're going to get into the nickel story for tonight. I'm going to put up the money characteristics in a second. I'll let you just enjoy that photo for a few seconds more. And then we'll say farewell to Linda and hello to nickel and money. All right, here we go. Last night we talked about whether copper was money. And we used this chart here and we determined copper fit all the characteristics. It was fungible, durable, portable, divisible, accepted, unit of account, medium of exchange, store of value. I didn't put in the X's here, but I can say tonight, we can go through them together. Nickel is fungible. We've seen that is durable. In fact, nickel resists corrosion very, very well, probably better than copper. And it does withstand very high temperature. So nickel is pretty indestructible. That's why they use it in jet planes and military hardware. It's a very, very important metal. It's divisible, as we've seen. You've got nickels there, right? It's accepted when it's cast into coinage. When it's cast into coinage, it's obviously a unit of account. You pass it along. It's a medium of exchange. And we're going to look at the store of value issue as well. But here you go. Here's nickels. I put these together today. Instead of buying a stock photo, I made my own. It's pretty nice looking there. You got all the nickels. You got the new ones. By the way, the nickel composition is really only 25% nickel. And this is a nod to copper. 75% of a nickel is copper. And nickels, as we'll see, have only been part of the U.S. monetary system since 1865. And we're going to go through the coins that came out around 1865. The nickel came out in 1866. All right. Now, let us take a look at the U.S. monetary history of nickel. As I mentioned, copper, silver, gold, all were there at the start pretty much. You had the mint being started in 1792, I believe, and almost immediately they started minting copper coinage in 1794, I believe, and then the silver coinage came out another, I think, 1895, 1896, and the gold, I think, came a little bit later. The eagles came out in 1795. So from the start, your three monetary metals were gold, silver, and copper. Now, nickel came along a little later, and one of the things we should note about nickel is nickel does not have, not only does it not have a full monetary history in the United States, meaning it wasn't there, wasn't down from day one, nickel was only first identified even as a element until, I think, 1750. And wasn't used into coins about 100 years later in the United States. The other interesting thing about silver is there is no nickel, is there is no nickel mining in the United States. Very, very interesting. It's also a very abundant metal. Now, generally, when something is abundant, it's harder for it to be a store of value, like we saw maybe with copper. A lot of the comments over the last few days about the copper being a store of value, a lot of people were saying, but silver is rare, silver is precious. That's all true, but it's not really precious enough because its rarity hasn't really given it the value, like, for example, palladium. That's all driven on rarity and shortage. And copper is relatively abundant as well. And as we've seen, the difference in price between copper and silver is pretty large. But the difference between gold and silver is large too. It's 85, 86, 83, whatever times greater the value of gold to silver. So as a store of value, generally, a lot of people like to add to that store of value definition is limited supply. Now, obviously, any metal is limited in supply. It's just how abundantly available it is. And one of the arguments for silver is that silver is so useful. Yes, it is, but it's not, the demand for silver is not growing exponentially. It's growing at a very modest rate, and so is the silver mining. So that's why you haven't seen the big spike in silver prices. Manipulation aside. All right, so now you have nickel is a very abundant metal found in the 1750s, very durable, resists high temperatures. The problem with nickel is not just that the United States doesn't mine it. It is way down in the Earth's crust. It's not the easy. It's not like a lot of silver mines, gold mines. You know, you see the guy with the pan, probably made out of nickel, in a stream, and you say, "Oh, here's some gold. Oh, here's some silver." You don't get that with nickel. So even though it's abundant, it's not the easiest to get at. Just keep that in mind. And that's why, historically, people use gold and silver. You're talking people, or copper, going back to the Bronze Age. You're talking about people that were, I wouldn't say they were cavemen, but you're going back to where they didn't have electricity, they didn't have sophisticated mining equipment, and they were digging stuff up by hand, using tools that they got from the stuff that was closest to the ground. It wasn't like they were digging and drilling deep into the Earth's crust to get minerals. All right, so now we know that nickel came onto the scene late as an element and came onto the scene later as a monetary metal. Now, why did silver come onto the scene as a monetary metal at all? Well, let's go back and review our history with the United States. Is first of all, there used to be a thing called a half a dime. Here's a picture of one. Now, that is in 1860, and that is made out of silver. That's the back of it. It says half dime. What's a half a dime? 5 cents. In 1860, there weren't any nickels. Nickels are 5 cents too, and there's the front of it. This is the Liberty seated half series, so this particular design was on the half dimes, the dimes, the quarters, and the half dollars. And even, I believe, didn't they make them in a... Yeah, they even made them in a dollar form too. So this seated Liberty was the coinage of the early and mid 19th century. So there it is, a half a dime. There was no such thing as a nickel, and it was made out of silver. There was also a coin that was a 3-cent piece, and that was made in silver from 1850 to 1873. Now, the only reason they had the 3-cent piece was because they also had they came up with, I don't remember the details, a $3 gold coin, and they wanted to have the equivalent in silver. So they made this 3-cent silver piece from 1851 to 1873. Now remember, the gold rush of 1849 actually made silver very expensive relative to gold. And remember, you had the bimetallic era. If you don't remember any of this, you can go back and watch the Gold Cross and Silver Cross YouTubes we did earlier last week. But what happened was, during this period of time, silver became rare. And then the fortunes changed when they found the Comstock lode in 1859. And after a couple of years of doing drilling there and mining in Nevada, then silver became very plentiful and gold became rare again. And then in 1873, as you remember, keep these dates in mind, in 1873, they demonetized silver totally, meaning that they did not allow people to bring their silver to the mint and have it crafted into $1 silver dollars. And the reason was the silver was cheap because there was so much of it. And in a sense, it was a government subsidy to be able to do that, to bring silver to the mint, get it forged into a $1 coin. Well, you've just been given a subsidy. And that's what the Silver Democrats ran on still in 1896, William Jennings Bryan. We covered that in the Gold Cross video. What he wanted was that to bring that back, the free silver concept. Because if silver could be produced in abundance, then the money supply could also be increased, because all that silver could be converted into coinage. And then people who had debts, just so you know, that's the idea. If you're a debtor, you want inflation. You want to inflate away your debt. If you're a moneyed person, a moneyed class with little debt, you want to maintain the purchasing power of your dollar. And that's what the gold standard people wanted. But back to these silver 3-cent piece, which was short-lived. But the silver 3-cent piece was even shorter-lived than the coin, which lasted all the way till 1889. Well, what happened was people started to hoard the silver 3-cent piece. And by 1873, they said, we can't do this anymore, and they got rid of the 3-cent piece. And let me show you the back side of that coin. That's the front side of it. In 1865, for the first time in U.S. history, they started to mint nickel 3-cent pieces. Now you can see on both, they have the 3 there in Roman numerals. The silver one is obviously smaller. The nickel one is larger. But in 1865, they started minting a nickel one. And by 1873, they just gave up altogether on minting those coins. And in fact, after 1853, even though they continued to mint them to 1873, they minted them in the smallest amounts. I'll give you an example. During the Civil War, 1863, 21,000, 1865, 8,000, 1867, 4,000, 1868, 3,500, 1870. If you have any of these silver pieces in those dates, they're really rare. The one that you see here, they minted like 12 million of. It's not rare at all. It's not worth that much at all. The nickel ones are even worth less because they have no silver value. And in fact, the silver one there doesn't have much value either. It has basically no value. I mean, that thing, it doesn't even weigh, I don't know, weighs like less than a gram, and that thing is tiny. But the nickel came along in 1865, and that was the first U.S. coin made out of nickel, and that went on till 1889. And they don't wear as well. I mean, they don't wear out as much as silver. The designs on a lot of the nickels do wear out, but it's a very durable coin, and you can't really tell from looking at it. So that was the first nickel coin in 1865. And then in 1866, they came out with the first nickel 5-cent piece. It actually is 5-cent piece. It was the Shield nickel. Came out in 1866, and the composition of that again was 75% copper, 25% nickel. They minted that particular coin. That's the front of that coin. The back of it says 5 cents. The original ones just had a 5, a V. Not on this one, but on the Liberty head, they had a V, but it didn't say cents. So people used to gold plate them and try to get $5 for them. Some people fell for it. But the the first nickel, the Shield nickel, 1866, was minted until 1883. And they minted these in copious amounts. These would go for 10, 28, 15, 16 million in any given year. And when they finished this one in 1883, they started with the Liberty Head nickel. And the nickel then became a very commonplace coin in the U.S., very, very acceptable. The concept of the nickel, meaning 5 cents, no longer a half dime, but 5 cents is a nickel. You don't even say 5 cents anymore. You say got a nickel. Then you had the iconic Buffalo nickel from 1913 to 1938. And you've had, since 1938 till now, still, the Jefferson nickel. The nickel is the only coin today that has not undergone any change in size or any change in composition. The penny has undergone many changes. It used to be a large cent, and then it was a smaller cent, and then they took the copper out of the penny. I added zinc to it. This nickel is the same composition in 1866 as the one today. Nickels today are still 75% copper, 25% nickel. I like when people, they keep trying to collect the pennies for the copper value. It's much easier to collect nickels. You don't got to check dates. They're all the same. They all have the copper and the nickel in them. All right, so I think we've shown that the nickel is an established unit of account. You've seen they last, and they could be considered money. Now, what about store of value? Filled in this chart here. Now, it's important to tell that whatever period you pick to look at value. You're cherry picking. But oftentimes, it's difficult to pick an appropriate period. So, for example, from 1934 to 1974, the government fixed the price of gold at $35 an ounce. So comparing gold during that period to silver or anything else, you're not getting a good comparison because the free market isn't valuing gold. Since 1974, you can say, okay, well, now we can value gold and silver on somewhat of a apples-to-apples basis, but really you can't, because during 1934, 1944, 1954, gold and silver were still in circulation as, well, gold, this is why it gets difficult. Gold was not in circulation after 1933 as coinage, and silver was. So they were both money because the dollar was backed by gold. The only time you really got a great comparison between gold and silver was during the bimetallic era from 1792 to 1873, because then they were both considered equals in the monetary system. And there you can get a gold-silver ratio. Now, when you start comparing gold or silver since 1974, well, then they've both been put into futures markets, which means they both can be manipulated. And that means silver can probably be manipulated easier than gold because silver's smaller. But also, they have now different properties. Gold is semi-monetary because it's in the banking system. Silver has been totally stripped of its banking system function as a backer of silver certificates. It's been stripped of its currency function in terms of coinage. They're all gone since 1965. So it is hard to pick a period. So what I've done here is I've taken the average annual price of gold, silver, copper, and nickel in 1999, 2009, and 2019, just to give you 10-year increments over a 20-year period. Now, gold's average price in 1999 was $279. In 2009, it was $972. And in 2019, it was $1,307. That's where it is now. So the 20-year gain was bigger than silver, copper, or nickel from 1999. The 10-year gain is also the best of the bunch, too, 34%. You look at silver, the average price in 1999 was $521. By 2009, it was at $1467, and this year it's $1565. The 20-year gain is nearly 200%, but the 10-year gain is only 6%, and that's not very good. I mean, 10 years is a long period of time. To only rise 6%, you're not beating inflation with that. Copper, on the other hand, in 1999 was $1,573 a ton. Then it went to $5,165 in 2009. And now it's at $57.20 in 2019. The 20-year gain is bigger than silver's, $263, and the 10-year gain is 11%. And that led me to believe that, conclude last night, that copper actually, during that time period, there's no way you can deny it, was a better store of value than silver was. Not just in the 10-year period, but in the 20-year period as well. That was hard for a lot of the silver people to accept, but silver's a precious metal. I've watched silver videos. I've watched them on so many different channels, and silver is rarer than gold, and silver is so useful, and the dollar's going to collapse, and silver this and silver that. Well, okay, you may think all that, but the world has not, the markets have not given that value to whatever you have seen on those silver videos, because copper's outperformed silver over the last 10 and 20 years. Now, nickel is a different story. Nickel was $6,000 a ton, much more than copper. You can see it's a more expensive metal in 1999. In 2009, it went up to $17,373, and then in 2019, it went to $89.31. So the 20-year period, nickel gained 48% from $6,000 to $8,900. Well, that's not bad, but that's not as good as the others. And it actually was down from 2009. It's down 51% when it hit 1753. Now, that's a strange thing. Now, this is what you're going to see in commodities from time to time. I got another chart. By the way, these are coming from Metallarly and Kitco. I got these numbers from. Each of these metals has had a spike at some point. That's very classic amongst commodities. We're seeing it in palladium now. The one thing about commodities, they can get caught up in an updraft. Gold seems to do it less because gold is never in immediate demand the way other commodities are. Silver, copper, nickel, platinum, palladium can have immediate industrial demand. Boom, have to have it. The price is going to go higher. It doesn't matter. They're going to pay it. Whereas gold is never going to spike the same way, even in a financial crisis, because some people will hold. They won't. And if, remember, in a financial crisis, if your currency goes down, you can't buy it. You don't have enough of your currency to buy much gold. Also, in non-currency, just your currency is depreciating, but not that much. The price rises, like for the Indians, they won't buy it when it rises. So you're not going to see that immediate pop the same way you have seen in silver, copper, nickel, and palladium. Let me show you what I'm talking about with best year prices. So let's take a look at this over the last 10 years. Now, gold in 1999 was $279. Its best year, it went up to $1668. Now, gold did not spike to $1668. If you ever look at a chart, I should show this to you. Gold steadily rose in 2000, 2001. It did not make a straight beeline shot up. It went up like 12 years in a row. And its best year was 2012, not 2011. Even though in 2011 it hit its peak, the average price was its best in 2012, even though it hit its peak in 2011. But that was a gain of, if you took from 1999 to its best year, it didn't spike from 1999 to 2012. It kind of rolled into it. And that's almost a 500% gain. Now, silver also it's different. Silver didn't go from $5 in 1999 to $35 in 2010 average. Most of that gain happened started around 2009. And the bulk of the gains in silver were from mid-2009 to April 2011. And that's why the average best year was 2010, not 2011, because the price fell off in 2011. And that was a spike to 30, to that price. And that was a bigger gain than gold, but it all happened in a much shorter period of time, a 574% gain. That's why I always call silver a spike and dive metal. Gold doesn't spike and dive in the same way. When silver spikes, it goes higher faster, but it'll drop a lot faster. But you can see silver has the best spike on this chart. Copper was 1573, and it went to its best year was 2011, went to 88.23, and it had a 461% gain during that period. So, but look at nickel. Now this is the fastest spike, because while it took during our 20-year period, it took gold from 1999 all the way to 2012 to get that 500% gain. Silver got it 2 years earlier in 2010. Copper got it in 2011. Silver spiked in 2006. In 7 years, you went from $6,000 a ton to $37,000 a ton, and that was a 518% gain. So that's why when you go back here and you see it looks like it lost, well, it did, but remember where it was spiking from. There you go. All right, let's go over and see. We'll pitch the mugs, we'll pitch the donations, and we'll see what you guys are saying. There you go, Smaulgld Classic and Super Classic mugs. Nothing in the mailbox today. Last few days I have received some very generous donations. Thank you very much. You see that on your screen, how you can donate to Smaulgld. You can become a patron. Someone asked for a one-off PayPal donation. You can do that. That's paypal.me/Smaulgld. And of course, you can always donate via Bitcoin and Litecoin. And always get your Smaulgld mug. And keep those pictures coming. It's very enjoyable to see people in their natural habitats enjoying their mugs. All right, let's see what comments we got tonight. All right. Joe Smith, all I buy is nickels. No one can steal enough to hurt my life savings. I don't know how you can buy nickels. I guess you can pick them up. Not only Lucky's shown sideways. I got to fix that, Pablo. Lucky is our... No, last night I showed you a picture of Lucky that was straight up. I do have one picture that I have that's loaded into the system correctly. Lucky is the Doberman pincher of Pablo Pina, and he's a fine dog, and he loves his Smaulgld mug. DBC is here. We saw him earlier with his Smaulgld mug. Seth Shepard is here. Scott Wardell. One can argue that all metals have an aspect of currency. That is true. Well, yes and no. They also have to have some history of being crafted, forged into coins that have been accepted as a medium of exchange and a unit of account. Palladium has never been that. It's not plentiful enough, and it's just never been tried. Platinum was tried in the 19th century when it was discovered, or the 18th century in Russia. They made coins for a while, circulated only in Russia. Nickel's pretty widespread. We saw last night with copper, many of the coins in Europe and Britain and, of course, the United States have nickel in them. The dime has nickel in it. The quarter has nickel in it. The nickel has nickel in it. The half dollar has nickel in it. And the those big dollar coins in the U.S. makes also have nickel. Excluding counterfeit mugs. Okay. Seth, nickel is not worth storing for wealth preservation. Well, it's impracticable to store. That's why, actually, commodity ETFs, which I haven't looked at, I'm not advising, it's not investment advice. If you actually understand commodities and you understand what they're used for and you're really interested and you know where the demand is, you might do well trading those ETFs. You say, oh, nickel might be, or copper, or palladium, or tin, or aluminum. People have focused on silver because there's a lot of information that's readily available for people online. All these, you got to remember, I don't know how people, this just eludes them. Think about where you've received most of your silver education. Guarantee you 90% is from people selling you silver. So, not that they're giving you bad information, but they're giving you silver in its best light. And it's possible in a given year or given 10 years that copper, nickel, platinum, palladium, if you're into metals and just commodities, they may do better. They have done better. There have been years where they spiked. Rhodium. All of these have done better than silver. But there's no channels dedicated to rhodium, dedicated to copper, dedicated to platinum, palladium, nickel. And I'm not going to do it either. I mean, I know most about gold and silver, but it'd be important to learn about the other commodities. Junk dimes. Bill Burr for Attorney General. Okay. Scott is asking, what will our Aussie friend, I think it's about Roger Henley, he's a Smaulgld subscriber, who made those Smaulgld fake plastic mugs. If counterfeits take off, we'll never be able to keep up with demand. Oh, who's Joe Smith? We don't have a Joe Smith here. Oh, there he is. He's saying about nickels, yes. What is Facebook? I stopped using it years ago. Now, what's going on here? We've got... All right. Morning Mayan, Trend News. What's up with your ego? This is his show, and he always answers questions at the end. Listen to pal, be patient. I know what comment that we're talking about there. Ah, Trend News. I guess he's pointing at it. Who are you to go live and ignore viewers? What's the point? Listen to you buy. Yeah. All right. Well, I guess he didn't know, and he's not going to find out. No patience. So thanks for those who defended me for a comment I never saw. But I guess that proves his point. I go live. I guess some people, they go live and they have this interaction. The way I've done it, and I introduced it at the beginning, is I have something prepared, a topic of the evening, and that I have news to report, and then we take questions at the end. All right. Yes, you're nobody if you don't have at least one troll in the chat. That's right. I like to think when people become trollsome is when I actually get into action. But since he's gone, I can't chase him off. All right, well, thank you, Morning Mayan, for chasing him off, or if he chased off himself. And DB Stupid is here with the popcorn. All right. Rad Vladley. I like the idea of taxing consumption in place of income and property taxes. No tax is even better. Yes, that's true. One of the advantages of taxing of taxing consumption is you can actually avoid the tax by not consuming, which is different. You can't avoid the income tax other than not making income, which is going to harm you. Whereas not consuming, as Linda will tell us, may be a good thing. I mean, her point of view on this year, no buy year, is that when you spend money wastefully, you are wasting your own energy, and that is the energy that you put into making that money, and that's almost disrespecting yourself. So you also, another way of looking at it is if they ever put a consumption tax in, Linda, your no buy year would mean no tax year, or you'd limit your taxes on consumption because you wouldn't be buying stuff. So that's it. Yes, I agree. Better no taxes whatsoever, but yes. All right. I stack generic mugs, says DB Stupid. And Seth is drinking out of his Smaulgld mug at the moment. You got to send me another picture. Pablo's doing the same. Start a movement. Mug me too. All right. Seth says it's definitely his favorite mug. And Andrew's got his second mug on the way. I think you bought the Smaulgld. If you might not have seen this. I announced the Smaulgld new game changer mug, where you can actually change the words game changer into whatever font you wish. That's available at the Smaulgld store, and it comes in gold. It's somewhat of an attractive mug. It's more of an anomaly, but there it is. There's the Smaulgld game changer mug. It says game changer on the back. You can go to the Smaulgld store and check it out. If you can't find the Smaulgld store, then go to smaulgld.com, and you'll be able to figure everything out there. All right. 80 ounces of copper mined for each person in the world, 1/10 of an ounce silver mined for each person each year, says Mike. Now you're going on the rarity argument, but I would also note that you probably use copper a lot more than you use silver in your life. If you get your water through copper pipes, you live in a house, there's copper wiring. So you have to remember, you have to match supply and demand, and copper is in very high demand. There's copper in electronics as well. So it's a good data point, Mike, but it's not dispositive that silver is rarer than copper, and therefore silver should be more expensive than copper. Well, yes, but how much more expensive should it be than copper? And, you know, who does a silver-copper ratio? I don't know. We should do that. All right. Let's see. Gold is best metallic money. Ann is at a concert, and she's still checking in. What concert are you at, Ann? All right. Let's see. What else have we got? DBC, interesting nickel history and composition, 75-25. Cool. I never knew that about the half dime, says Seth Shepard. Well, yes, that's why we are here, is to learn. Silver is a very emotional metal, up and down. Saw some comments here. Remember, no harassment on the channel. Compliments are fine, but no harassment. Let's see. Today I'm at Pizza Fest and she's going to the gym, says Ann. All right. Wilfred says, I'm just here for the free like smashing. Well, that's very kind of you. Too bad you can't do it more than once. I mentioned the other night that they are going to, YouTube is thinking get rid of the dislike button, because I think they feel offended that one of their Google Rewind videos got trashed. And it often is the case. The Gillette commercial got trashed. Things that they want to promote, and if people are like, no, screw this, dislike, they call it like a dislike mob. The other thing Twitter wanted to do was stop keeping the number of followers you have, because they thought that followers may lead people to think that someone has something more important to say because they have more followers. They really are just trying to orchestrate a result, which is not good. All right, Pablo, an idea for tomorrow's topic is mug money. First of all, that would have to be a rhetorical question, because we know that mugs are money, period. You've all seen the video, 18 reasons why you should own a Smaulgld mug. So many reasons. In fact, I'm going to close with that tonight, because if you haven't heard it yet, or if you have heard it, it's worth reminding yourself that mugs are real wealth and that you really need to have your priorities straight. Before you go out and buy gold or silver, you really got to make sure you have your first mug and you're on the way to mug life. And so what I'm going to do is I'm going to show you mug life and direct you to smaulgld.com, and you're going to listen to the 18 reasons why you should buy and hoard mugs. I'll stay on the line in case anyone has any comments. Remember, you can put, if you're a prepper, you can put Mountain House in a mug. You can't put Mountain House in a silver coin. You can't put Mountain House in a gold coin, but you can put Mountain House in a mug. So just remember that. It's one of the main reasons to have mugs. They themselves can be barter items, and you can put barter items in them. You can put your prep food in there. You really have to get your priorities straight here with the mugs. But let me show you the mug life, and then we will play for you. Maybe we'll show you Buddy. There's Buddy with the Smaulgld glasses. What a cute dog. Look at that. What a fine animal. All right. I'll get you ready here. So many game-changing photos I have here. Tempted to show all of them, but I can't. There's mug life, and here comes your reasons to buy and hoard Smaulgld mugs. Remember, I'll be on the other end of this with any additional questions or comments, and we'll see you on the other end. Ten reasons why you should buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 1. Mugs have been used for drinking for more than 5,000 years. Number 2. They are finding more uses for mugs every day. Number 3. We could not live our lives without mugs. Number 4. The Russians and Chinese are buying mugs hand over fist. Number 5. Mugs are made in China. Number 6. Mugs are hard assets. Number 7. Mugs are real wealth. Number 8. Mugs cannot go to zero. Number 9. Mugs are portable. Number 10. Mugs are drinking vessels, period. Wait, there is more. You can mix Mountain House in a mug. You can carry your barter silver in a mug. You can do many things with mugs that you cannot do with fiat currencies. Measure your wealth in mugs. They have mugs at the offices of JP Morgan and central banks. That is all you need to know. When the excrement hits the fan, you'll want to have your Smaulgld mug close by. Buy your Smaulgld mugs today. Reasons to buy and hoard mugs. Number 11. You can stack mugs. As you can see here, mugs are stackable. Add to your mug stack today. Buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 12. You can put coffee in a mug. As you can see here, someone very clever has done so. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 13. You can put cognac in a mug. As you can see here, someone is thinking of putting cognac in a mug. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 14. You can display a mug on a studio soundboard. As you can see here, someone has displayed a mug on a studio soundboard. This highlights how versatile mugs can be. Mugs can be put in countless places, and we intend to show you as many of those places as possible. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 15. Mugs do not require electricity. As Smaulgld subscriber Wild Bill points out, mugs will still be usable after an EMP. Mugs do not require electricity. Here is a picture of a Smaulgld mug and another Smaulgld mug. They will look the same before and after an EMP and never require electricity. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 16. Mugs are undervalued. The price of mugs is about the same price as it was 10 years ago. This means that mugs are one of the most undervalued assets on the planet. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 17. You can hold your keys in a mug. Keys are very important. You can hold your keys in a mug. As you can see here, someone has put their keys in a mug. Buy a Smaulgld mug. Reasons to buy and hold mugs. Number 18. You can defend yourself with a mug. Mugs make great defensive weapons. In many states, you can open carry mugs. In all states, you can conceal carry mugs. Protect yourself with a mug. Buy a Smaulgld mug today. All right. Well, thank you everyone for joining me tonight and listening through to the end of the mug pumping pitch. We will see you tomorrow night. Don't have a topic yet, but tomorrow will be Friday night, and then we'll do Saturday Night Silver with Smaulgld on Saturday, and then Sunday night and flow into Monday. So thank you very much for joining me, and we will see you tomorrow.